Well, let's get more and find out what's going on with these fluctuations in the price of gold. We're joined now by Ahmad Khatib, who is an economic analyst. Thank you very much indeed for coming in to see us. It looks like gold prices bounced back during the course of Wednesday trading. I mean, what's going on here?
Well, the context of what's happening goes back to 2025, which was the biggest year for the increase in gold prices and silver also, after not seeing such movements in gold for so many years, like close to 15 years. The momentum of the increase in prices was picking up, accelerating, which invited a lot of speculators into the gold market. And a lot of predictions were always circulated about a correction coming. It wasn't coming. Prices were continued to going up until Friday, where there was somehow a trigger in the market that started some panic, and it was the worst day for gold in history. The drop more than 30%. 10%, 30% in silver. After the weekend, Monday, Tuesday, we saw like a V-shaped rebound in prices, and it stabilized somehow at those levels. It looks like there is like a shake-up in the risk related to gold trading. The fundamentals haven't changed at all before or after those big moves. Geopolitical tensions are still there. All the economic uncertainty, financial market things not being clear about the U.S. policies related to tariffs have always been there. Geopolitical, the Venezuela, Iran, Russian war, all been there. So it's not the factor only driving gold prices up or down. The speculation weight in the market has taken the driver's seat in pushing the prices.
Okay, I mean, on Tuesday, gold went up by around 6%, which I think was its biggest daily gain since November 2008. And when I cast my mind back to 2008, I mean, that was around the time of the Lehman Brothers
financial crisis,
disaster, the collapse, the financial crash. I mean, are there, as well as the geopolitical concerns you mentioned, are there major concerns about the health of the global economy?
Well, there are, but they haven't changed in the last few days. But there is the general view about the gold being a safe haven, but how much of the price is attributed to that concept, being a safe haven, trying to protect value of money, central banks trying to, non-US central banks, of course, trying to diversify away from dollar, even investors diversifying their investments into gold. How much is that feeds into the high prices? Fundamentals, as I said, haven't been changing that much. That's why I always say recently that the speculation, like the ETFs, the electronic traded funds, the hedge funds, what we call paper gold, people trading gold only for speculating on the price, not holding the physical gold, actually drives the prices with that pace. The acceleration of the increase and the decrease is not a normal physical asset movement.
And one of the other striking things about the last 10 days or so is that while we've seen gold prices, well, on a roller coaster road, but on a sort of upward trajectory, is seeing that crypto has been on a downward trajectory and Bitcoin is pretty low at the moment. And I'm wondering if there's a correlation. Do you see any?
No, I don't see a direct correlation. It's more of things we've been seeing over the last week or 10 days. When you have big movements in asset classes, you see investors moving funds from one asset to the other to cover their positions. So crypto, Bitcoin specifically, was under pressure recently because it also reached, the movement in crypto going up and then going down. What we saw on gold now happened to crypto and Bitcoin specifically. So there is a lot of shifting funds between asset classes. I see it more than a correlation, people moving from Bitcoin to gold.
Okay, so we shouldn't read too much into that. Some analysts, some of your colleagues in the industry have set their year-end targets for gold at $6,000 an ounce. But looking at where we are right now, I mean, do you think this $6,000 an ounce could come a lot sooner than the end of the year?
I hope it doesn't, because that makes the market riskier, and this is what we've been seeing recently. Over the last few months, the predictions or expectations of gold reaching 5,000 and 5,500 was expected maybe mid-2026 and later, and gold achieved that in a few days, and then we saw the reverse movement. Now we still see the predictions of 6,000, 7,000. Some go extreme, 10,000 and more. I hope we don't see that movement, because that would be really risky for the market.
Okay, does the demand for gold, this is really for the benefit of our viewers, does it mostly come from central banks? Does it come mostly from investors? Or does it come from individuals who like buying gold jewelry and gold coins so they have a tangible asset?
Historically, it was the central banks and normal people buying jewelry. But that has been changing over the years, and I'll give you some. In 2025, I don't remember the exact number, but the amounts bought by central banks was lower than what they bought in 2024. However, the money inflow into ETFs that trade gold increased 20 times. So more demand from speculation venues, ETFs, hedge funds, than the physical store of gold.
Okay, that's good to know. And it's reported that central banks are increasing their purchases of gold bullion right now. Why would they do that when the price is high?
Well, the central banks don't care about the price. They care about the long-term value, because they're mainly concerned about diversifying away from depending on the dollar. Like, for example, China consistently buys, the Central Bank of China consistently buys gold, because they want to have more gold in their portfolio of assets than treasuries of the US, which is in dollars. So that's why central banks outside the US continue to buy gold regardless of the price.
You've mentioned already silver, and it's been going up and down like a yo-yo. It was at $121 an ounce last Thursday, wipeout on Friday, down 27%. By Monday, it was $71. But I mean, when you think about it, last year, silver was at $32 an ounce at various points. I mean, have you ever seen anything like that level of fluctuation before in your career?
No. Silver has always been lagging behind gold historically. Now it was moving ahead of gold in both directions, actually, when it was going up and when it was going down. Silver has some other factors that affect it, because silver is used in manufacturing, for EV, solar panels, and so many things. But still, does the demand for silver in such manufacturing requirements justify that much increase of silver recently? We'll have to see how much silver can maintain those levels in the future.
Okay, so just to wrap up, I mean, gold remains, it would appear, the ultimate safe haven, with not much sense that crypto gets a look in when it comes to sort of really being the ultimate safe haven investment.
No, I think crypto still needs a long time until it proves it can really store value for the long term without severe fluctuations in its value over a short period of time, which is what's happening in gold now. So I don't know how much gold can still maintain a long-term safe haven status. Yeah.
All right. Thank you very much. We're going to have to leave it there. We're out of time.
Thank you very much.
Ahmad Khatib, economic analyst, thank you very much indeed for your time.
Thank you very much.